if you want to know what's the difference between hype and reality, okay? Hype is when you don't have anything substantial backing something in the financial markets in terms of a dollar amount, okay? So let's say, for instance, all these companies had nothing to back it in terms of dollars, okay? They weren't guiding for any higher numbers. There wasn't anything like that, okay? That's a whole different scenario than you have a company that was expected to grow 6% in this upcoming quarter, and they say, actually, we're going to grow 60%, okay? That's no longer hype. That is now reality, because now we're talking about real dollars that are going to pour in a massive, massive way, okay? So no longer is it just some hype, excitement type thing, okay? And so I think that's very important to understand. You could have said in 2008, wow, look at all this hype around these smartphone things. Oh my gosh, it's just a bunch of hype bubble. Look at all these semiconductor companies that people are starting to want to talk about and invest in. Oh, it's just at the end of the day, it was real. It was reality. It was a new game change, right? And you could go through so many technology advances and see that. When the numbers are there, it's no longer hype. It is reality, folks, okay? That's a big difference between some crypto that no one ever heard of and no one cares about and no one's actually doing anything with it, right? Like, we're in 2021 and they buy that and that's hype. Okay, that's a whole different ballgame. When we're talking about real money, billions of dollars of real money, this is a whole different game. So I know a lot of people that have very strong opinions on C3 AI, okay? I know some people personally that tell me C3 AI is a bunch of crap. And they basically tell me, their product is nothing. And it's, basically just kind of like fake AI, I guess you can say, okay? And they're not believers in what they got going on as far as their actual business model at all, okay? Personally, I've not gone down the rabbit hole enough to have a strong opinion, positive or negative, okay? I haven't seen anything with the company that makes me say, I got to go buy this one, and this is, huge, and this is going to be massive. I haven't seen anything yet that gets me passionately feeling like this is, that company's, a fraud, and, it's just a bunch of crap, okay? So for me, I don't really feel like it either way, but do keep in mind, some people that I can tell you are much more what I would call, they have a much bigger expertise in these sorts of companies, what they're up to, what they're doing. What I've heard from them is C3AI is not it, okay, at all, okay? That's their perspective, not my perspective, but do keep that in mind, folks, okay? And I know some people that know a lot more than I do about the AI space, I can tell you that. SDAO. So SDAO's been treating me actually pretty respectable so far, okay? This past 6 months, it's been doing very well. SDAO is basically a 3x against the Dow Jones Industrial Average, okay, on a daily basis. Now, in regards to this, right, I still like SDAO as a hedge, right? And obviously, I'm positioned long in the market. Most of my money's in long positions. So if we have major weakness in the market goes down 20, 30%, something crazy happens, right? 40%, who knows? I like to have some hedges. It protects me, right? In terms of the Dow, here's the biggest weightings, okay? You have United Health, right? They could face election pressure, we'll see. Sometimes some of these healthcare-related plays, they face election pressure, which obviously, we're going to have a presidential election coming up in a year, and so they could face some pressure there. There could be some worries about that, right? Microsoft has a very rich valuation right now. Goldman Sachs is lost right now, in my opinion. They're trying to really figure out the direction of the company. McDonald's is a bubble, okay? Been a bubble for a bit here. Home Depot's struggling. Salesforce is kind of in an iffy place right now. They're actually down 6% plus after hours right now. And Visa obviously has very hard comps to comp against on a year-over-year basis. And obviously it's a company that would get hit pretty immensely if there is a bad recession, right? And so I think it's a pretty good hedge on the market. It's not as attractive to me as it was 6 months ago, but I think it's a decent hedge. Now you may say, why not SQQQQ, right? Which is basically the same thing, but it's going against the Qs on a 3x leverage on a daily basis, right? And I will say, this one's gotten a lot more interesting. 6 months ago, this wasn't even remotely interesting to me. SDAO by a mile. Now it's closer, but I still do prefer SDAO over SQQQ for an overall hedge, okay? But I will say it's gotten better, okay? So obviously Microsoft's the biggest weight. That's trading rich right now, right? But it's probably going to continue to trade kind of rich, to be honest. I mean, Microsoft, can it pull down 10 and 20%? Sure. Can it pull down 50%? That's very doubtful in regards to that, right? Apple is trading rich and it has big problems right now. And we'll go actually over that in just a moment, okay? NVIDIA is kind of scary both ways, in my opinion, for upside and downside. That one's just, you don't know what to expect there. I mean, if they come in with another great numbers, geez, that stock's going to boom, right? Amazon's going to be booming for this next 12 months. Meta's going to be booming for this next 12 months. Google's actually undervalued, and Tesla's kind of scary both ways. Tesla could come in with way better numbers or way worse numbers than anybody expects. So I think SQQ is more confusing than I would say than playing something like SDAO, okay? Apple, okay? I'm looking to likely buy some Apple puts, and I'll show you the strike prices here in just a moment, okay? And here's the deal with Apple, right? Apple's trading at an extremely rich valuation right now. I mean, approaching a 34 P. No, that would be fine if Apple was a growth company. The problem with Apple is this is a business in decline. And that's not my opinion, that's factual. Look at their last earnings, and you're going to see this is now a business in decline, okay? Doesn't mean they're going to be in decline forever, but it is a business in decline nonetheless. Now, here's the deal with Apple, okay? Expected to have revenues go down this quarter. Somehow, analysts are expecting them to grow revenue the following quarter. But overall, the year revenue should be down for this company. And then analysts are magically expecting next year them to have growth again, right? 6% plus revenue growth. I'm not so convinced they're going to have revenue growth, okay? Here's the deal. I don't know if you guys have seen leaks for the iPhone 15. It's the same phone again, okay? Now, they basically haven't had a major change for the iPhone since 2019 launch of the iPhone 11, okay? And I think Apple's gotten really complacent because they got all that stimulus money was pumped out there, everybody, staying at home, and I think Apple thought, oh, this design's just going to work forever. When in reality, people just were flush with so much money, they didn't care, like, oh, let's buy a new iPhone. That's not going to cut it anymore. You need to actually come out with something that's going to be a game changer to get that next level of growth out there, okay? I think they've actually gotten really, really complacent here. And what I'm looking at is this is a business that, Rona saved this company. They were having some problems before Rona actually happened, okay? You look at the iPad business and the trends that was going on, for years prior to Rona. Then all of a sudden Rona happened, all the stimulus money pumped out there, everybody has to be at home, school from home, everything from home, and iPad business boomed, right? It's long gone. Those days are over now at this point in time, so don't be surprised if the iPad business shrinks now at this point in time, okay? AirPod sales have been going down for several years now. This is a business in decline, and I don't know if that's getting better anytime soon, to be quite honest, in terms of the AirPod business, okay? Their Mac business was supercharged, obviously, by Rona, and now that's ended, and their Mac business is starting to decline quite substantially, right? PC shipments have not been in a good place. And in terms of services, the growth is starting to stall out there. Services used to be in the bag, 20% type growth. And now they're having trouble growing like single digits. So when I look at Apple, I think there's a lot of risk from several different angles here, which is why I think it's an interesting kind of hedge in the market. Do I want to risk the farm on this? Absolutely not. Absolutely not. But do I want to do it as a partial hedge? I like it. I'll be looking at something like March 15, 2024 hedge, something like 140 strike, pay maybe $4 for those. I could be even looking at something that's around the current price of the stock, which is around, $175, $180 puts, and buying something around there if I want to play a little safe. I might do something like 140s and then maybe 180 strikes, something like that, and kind of split the money a little bit. And it's just a good hedge. If the economy gets worse, Apple's going to get hit really hard, and especially given that iPhone 15 has nothing coming that's going to excite anybody and make anybody say, I got to go get that next iPhone. So